Okay, hi everybody. Welcome to this special webinar that I'm doing on charting the market using volume spread analysis and a Kagi chart. And we can call it Kagi, but for the purposes of this webinar, we'll call it Kagi. That'll be my British accent. But it is actually a Japanese method of charting the market. And it's not based on time, which is quite interesting. Okay, it's not based on time. But when you combine a Kagi chart with VSA, as I'm about to show you, you get some very clear ideas as to where the market's likely to go. Now, of all the emails that I get, and I get lots of them, as I'm sure you can imagine, through the various websites that we own, one of the questions I'm asked is, Gavin, I seem to get into a trade, I see a principle, the market moves in my favour, I'm in profit, and then I think, oh my goodness, the market's going back. I tell you what, I better take the profit quickly. I better take it. And you take the profit, could be a couple of $100, only to see your trade take off in the direction you were in. And at the end of it, you look at it and say, well, I could have made 3,000, I only made 200. Can I just ask, how many of you have done that, where you've taken the trade off far too early? And Dennis, yes, it's very similar to point and figure charting. I don't want to confuse people. Grigory, we're going to talk about that. But me, says David. Yeah, okay, a lot of people do this. Okay, it's one of the devious things about the market. The market does not seem to want you to make money, does it? It seems to want to play games with your mind. Once you get past all that, and you start to understand what the market is and its structure, you start to understand that it's all based around human nature. It's all based around two types of traders, the smart money and the dumb money. And very simply put, the game is the dumb money give their money to the smart money. That's trading. That's how it works. Now, the smart money operate in a number of ways. Number one, they use news and rumour to their full advantage. Number two, they understand the power of reading volume. They can manipulate the market at will. They can move a price because of their sheer size of orders that they can place. Number four, there isn't just one group that do this. There are large funds all over the world that have been doing this for hundreds of years. And indeed, Tom Williams, the man that taught me, was himself a former fund trader. We call them syndicates because they're never ever published. You never hear them about these syndicates in the news or the media. They're very private. They don't want you to know that they exist, but they make a lot of money. So when Tom taught me to trade, he showed me a number of things that were important to the successful trader. The first and the most important thing was volume, because volume is the activity or the footprint of the smart money. Then we look at the range of the bar, the high and the low of the bar. And we look at it in any time frame. I can show you charts today that are 1 minute charts, but I'm going to be focusing on daily and weekly charts because when I swing trade the market, I like to look at weekly and daily charts to give me an idea as to where the market's going. I will say now that I think the British pound will be at 1.5000 within the next 3 to 4 months. It may take a little longer, it may happen instantly, but at the moment, it's giving all the signals of distribution. The markets work in phases. The phases are accumulation, distribution, markup, and markdown. That's it. That's what was taught by trader Richard D. Wyckoff. Richard D. Wyckoff. Now, I'm going to give you a website that you can go and look at, which is being launched formally in the next few weeks, which is based on the work of Richard D. Wyckoff. There it is. It's richardwyckoff.org. If you type into Google and you Google Richard Wyckoff, as I'll do now, he was a trader, by the way, back in the very early 1900s. And if we Google him, you're going to find there's a number of images of the great man. And everything I'm going to show you today is based on the teachings of this gentleman, who's obviously no longer with us. He died in March the 19th, 1934. He was a genius of his day. Ah, Thomas, did Wyckoff use the Kagi chart? I don't know. But I do know that Tom Williams' syndicate did. And they used point and figure charts, and they used something called volume analysis. But we've added to that. We call it volume spread analysis. And when you look at the great traders of his day, Jesse Livermore, Gann, Andrew Maguire's come up. That's interesting. Charles Dow, Alfred Kingsley. You'll learn that the great traders, stock market operators of the early 1900s all recognized how the market truly worked and were able to read the tape, which means understand the volume. And the volume is very important. Now, this website launches officially in 2 weeks' time. You can still register here if you're still interested in finding out more about it. Just put we've got a customer login. But this website's dedicated purely to the work of Wyckoff. And Wyckoff traded mainly on 2 key signals. Does anyone know what they are? Let me just ask. Does anyone know what the 2 key signals that Wyckoff would use to determine when he bought and sold? Anyone know? Well done, Scott. Excellent. Yep. Definitely used supply and demand, but he had 2 names of signals that he used to love trading. Okay. Yeah, Scott, you got it. Actually, you're the only one so far that did. I'll put you out your misery. It's the spring and the upthrust. The spring and the upthrust. And today in this seminar, I'm going to talk a bit about those 2 signals and how when supply or selling enters a market, it happens in rising prices, which confuses everyone. Because they say, hold on a minute, Gavin, if the price is going up, there must be more buying than selling to cause the price to go up. But I'm going to show you that that cannot be true. Because there are times when, yes, the market will go up because there's more buying than selling. But this is where the Kagi chart, or the Kagi chart, comes in. And it comes into its own. Because we can measure without any time if professional money are bullish or bearish. Carlos is asking me, what's the difference between a shakeout and a spring? A shakeout happens at the bottom of a market, Carlos. It happens at the very bottom usually. A spring happens in an uptrend. A spring happens after a shakeout, the market rallies, and then it springs away from a certain price level. So shakeouts happen usually at market bottoms, and in fact today on the British pound, we've got a beautiful example of how a big time frame can be bearish and a small time frame can be bullish. So you must always look at the bigger picture. So the Kagi chart is a chart used for tracking price movements and to make decisions on purchasing. Now it says here in Wikipedia stock, but I'm going to show you today how you can use this in Forex, commodities and futures. It differs from traditional stock charts such as the candlestick chart by being mostly independent of time. This feature aids in producing a chart that reduces random noise. Due to its effectiveness in showing a clear path of price movements, the Kagi chart is one of the various charts that investors use to make better decisions. And again, in Wikipedia they say stocks. I'm going to show you this in Forex. So ignore that because it's not correct. It should say about stocks, Forex, futures and commodities. The most important benefit of this chart is that it is independent of time and change of direction occurs only when a specific amount is reached. The Kagi chart was originally developed in Japan during the 1870s when the Japanese stock market started trading. It was used for tracking the price movement of rice and found use in determining the general levels of supply and demand for certain assets. Now, that is what TradeGuider as a business is all about. Measuring supply and demand and the imbalances of supply and demand. Now, when we see an imbalance of supply and demand, it means the market's going to change direction. David is asking, what percentage do I set the Kagi charts for? In daily and weekly charts, I'll show you, but in the smaller time frames, it varies. Okay, and I'm not going to teach that tonight because I don't have time. We did do a specific course on that, so that is available on our website. But tonight I want to show you something that you haven't seen before, and it will definitely improve your accuracy of predicting profit targets. I'd be very surprised if it doesn't, and I hope that you'll see why. So, what does a Kagi chart or a Kagi chart look like? Well, it looks a bit like this here, okay? You see you've got these red and these green boxes, okay? And you've got wide spreads and narrow spreads. And they all mean something, and they're all important for various reasons. And the reason they're important is because they're showing us the likely near and medium-term direction. Richard, no, you haven't missed much. We've just started a few minutes ago. So we're just establishing, Richard, what a Kagi chart is. Now, again, I repeat, people say this many ways. In Japanese, it's Kagi. Kagi. In English, we call it Kagi because we're posh like that. In America, you may say something completely different, and Australians will probably say Kagi. But whatever it is, it's going to be a Kagi chart for tonight's purposes of the seminar. But it is Japanese. Okay, and it's based on where we see the likely direction of price. But what Tom Williams have done, which no one has ever done that we're aware of, is put volume up to measure the bullishness and bearishness of the chart. Now, I'm going to just show you today. This is a public seminar, so I'm not going to give away too much, but I am going to show you something that will pique your interest. And I'll prove to you that the short trade that I gave last week on the pound was combined from a VSA setup based on a Kagi chart, and I also use something called point and figure charting, which I'm not going to discuss tonight because this is a seminar on Kagi charts. So the Kagi chart is used for tracking price movements and to make decisions on purchasing stock, as we've said. Now, how do we construct a chart? Okay. Kagi charts look similar to swing charts and do not have a time axis. A Kagi chart is created with a series of vertical lines connected by short horizontal lines. The thickness and directions of the lines is based on the price of the underlying asset, as follows. The thickness of the line changes when the price reaches the high or low of the previous vertical line. The direction of the line changes when the price reaches a preset reversal amount, which is usually, and that's what I'm using tonight, set at 4% or near 4%. When a direction change occurs, a short horizontal line is drawn between the lines of opposite direction. Alternatively, thin and thick lines can be replaced with lines of direction colours. Changes in line thickness are used to generate transaction signals. Buy signals are generated when the Kagi line goes from thick to thin to thick, and sell signals are generated when the line turns from thick to thin. The basic algorithm used is find the starting point. The starting point is generally considered the first closing price. From this point forward, you compare each day's, and we're going to work on this, we're going to show daily and weekly today, so we'll stick with this. From this point forward, you compare each day's closing price with the starting price. Draw a thin vertical line from the starting price to each day's closing price, while the trend does not reverse. If a day's closing price moves in the opposite direction to the trend by more than the reversal amount, draw a short horizontal line and a new vertical line, beginning from the horizontal line to the new closing price. If the price on a day is greater than or equal to the previous high, change to a thick line and continue the vertical line. If the price on that day is less than or equal to the previous low, then change it to a thin line. Now that may sound very, very confusing to some of you. Don't worry, okay, because we're going to show you it in simple terms. The Kagi chart has a very simple connection to volume. What is it measuring, someone's asked? It's measuring the energy of the trend. Now I want you to imagine now that we're not going to talk about a chart for a minute, we're going to talk about a mountain. I want you to all visualize a mountain. I want you to visualize a road going up very steep mountain. And I want you to visualize coming over the top of the mountain and driving down the other side. Now, let me ask you a question. And go with me on this and you'll understand where I'm going with it. You're driving up a very steep gradient. Let's say it's a 60-degree gradient up the mountain. You've got your foot fully on the accelerator. It's fully down because you need to get up that mountain. What happens when you take your foot off the accelerator? What happens to the car or the automobile? Can you tell me? What happens? So you've gone accelerating up the hill. Okay, Thomas says it slides backwards. I would disagree with you, Thomas. Not immediately it doesn't, but it will eventually. It doesn't stop instantly. No, it won't. It definitely does not stop instantly. Okay, I'll give an example. You're doing 80 miles an hour, your foot's on the gas, you don't touch the brake, you just take your foot off the accelerator. Does the car keep moving forward, or does it eventually slow down? Which one is it? Does it instantly stop, or does it eventually slow down and possibly move backwards? Well, let me put you out your misery. Here's your hill. Here's your mountain. Here's a little car, look. There it is. Now, from here to here, you've had your foot on the gas, and you're doing 80 miles per hour or kilometers per hour. At this point here, you don't brake, you take the foot off the gas. Let me ask everybody a question. Do you stop at point A, point B, or point C? What do you think? Bearing in mind, let's say that's a quarter of a mile. And by the way, I'm an ex-police officer, so I know how to measure roads. So where do you stop? Do you take your foot off the gas here at point A? Do you stop at point A? Do you stop at point B? Do you stop at point C? Remember, the key is you're doing 80 miles an hour to this point, to point A. So you've taken your foot off the gas here. Do you stop at B or C? Most of you got this right. The law of physics will tell you that you've built up enough energy and momentum with your foot on the gas to carry that vehicle to point C. Because when you take your foot, you try this, you try it for yourself. You drive up a hill at 80 miles an hour, right? And remember, you've got your foot full down on the pedal in fourth gear. You take your foot off the gas, you're going to keep going. Does anyone know why you're going to keep going? What causes you to keep going? Because you've got no energy, you've taken the foot off the gas. What causes you to keep going forward? Well, we've got some scientists in the room. Kinetic energy, momentum, inertia, very good. Impulse, yeah. There's a universal law at work there, okay? We all know about the law of gravity that would want to pull that vehicle back. I'll guarantee that if you get to point C and you stop and you don't have a handbrake, bye-bye, you're going back down the hill. Now, why is this relevant to what I'm about to show you? Because when we look at a Kagi chart with volume, we can see how much the smart money are using the accelerator to push price up, or indeed to push it down. Let me ask you another question now. We're now going down the hill. You've come over the top, you've accelerated, you're doing 80 miles an hour down this hill. Okay, you're not going to use the brake. You take your foot off the gas at point A. You just take your foot off the gas. That's all you do. You don't brake. Where does the car end up? Does it end up at A, B, C, or D? What do you think? You're not braking. There's no brakes. Thomas says when you end up in a ditch, you hit a tree. Trust me, everyone, it's point E possibly, yes, which is down here. There's E, okay? And it's a very nice palm tree. Yep, there it is. Okay, bang. Now, why is this relevant to what I'm about to show you? Because it's relevant to price. Or you get a speeding ticket, says Dennis, yes. But I don't get them because I'm an ex-policeman. I just talk my way out of them or show them a different driving licence, but that's a separate story. But no, seriously, I'm not a big speeder. Being an ex-police officer, I can tell you, speed kills. And if you're driving, there's no rush. Life goes on. Do not rush around. I've been to some horrific accidents, which if you've been in my job and seen some of the things I'd seen, you wouldn't speed, trust me. So we see at point D that you're right. Unless we put the brakes on, the car keeps going, the vehicle keeps going. So the brakes are what we call stopping volume. We see it all the time. I'm sorry about the writing here, it's terrible, but anyway, you'll get the idea. Stopping volume. And we saw it today in the pound. Now sometimes stopping volume comes in different flavours. What do I mean by that? Well, when I was being taught by Tom, when you look at a tree, and you look at an oak tree or any tree, and you look at the leaves, they all look identical, don't they? I said, well, of course they do. You know, if you put an oak tree next to an oak tree, it looks like an oak tree, Tom. He says, you're right. He said, but you know that science has proven that if you take a leaf off that tree and take a leaf off the same tree and put the two of them under a microscope, they'll both look different. They will have different characteristics. They'll look the same on the outside, but through the way the leaf is constructed, there will be different shapes and sizes under a microscope. So I said, Tom, that's great. What the hell has that got to do with trading and stopping volume? He said, well, in my signals, there isn't one type of stopping volume, there are several, because they appear in different ways. So when we look at VSA, everyone just thinks stopping volume is stopping volume, but it comes in different shapes and sizes, a bit like a leaf on a tree. Some leaves are smaller than others, some are bigger than others, but I can tell you they're all unique. And this is one of the things about VSA that a lot of people find initially difficult, because you have to broaden your outlook and your horizons. You have to stop thinking of dead certainty and say trading is an art, not a science, although there is science behind trading, definitely. We know, without any shadow of a doubt, that markets move in trends. We know that markets go through phases. Accumulation and distribution are the key phases. And then reaccumulation and redistribution. We know that at certain price levels, the market does certain things and behaves in different ways. So when we look at a chart, we want to look at the big picture first. So, can everyone see my chart of the daily chart of the British pound versus the US dollar? Forex data I'm using. And I've got my Kagi chart here. And I projected last week a target of 1.570. It's on. You can go and see it. We projected that. Some of you were in the webinar last week. I was very specific. I said that by certainly Friday, possibly today, we would go to 1.5700. Now, did anyone hear me say that, by the way? How many of you were there for the webinar last Wednesday when I gave a target of 1.5700? Okay, good. Loads of you there. Okay. All right, so I didn't do that by accident, by the way. I didn't, just guess it. There's no guessing involved. There's a number of things on this chart that tell me that we're in a phase of distribution. Now, I'm going to put up 200 bars. You can see my trend channel. You can see on this Kagi bar here, we break the trend line. That's very significant. Now, I have a name for that bar in my book. Does anyone know what I call it? It's not voodoo. Thomas, I'm not using voodoo, honestly. I'm just reading charts. What do I call that bar? It's a very clear example of it. Yeah, good. A lot of you have read the book. Good. That is a gotcha bar. Okay, it's taken out some previous support levels, and if we actually put it into a bar chart, which we can do, you'll see it quite clearly there. And you'll also see behind us a very clear example here of upthrusts at previous tops. Now, this is something that Wyckoff would trade. He would look at an area of previous supply, is in the background here, and he'd say, do we have a secondary upthrust at the same level? Well, on the daily chart, my goodness me, it doesn't get any easier than this to read, does it? I mean, this is what you've got to do to be a professional chartist. You've got to look at the big picture. And you see, I can see here that there was a swell in volume, a narrowing of the range, and then a beautiful upthrust. That marked, at that point, the top of the British pound versus the US dollar. But then, professional money gave me a clue several weeks ago, which is why I became bearish on this contract, that they're distributing this particular instrument. I mean, we only have to look here. There's another upthrust. And then if we move forward to here, another upthrust. And then we've got another one. We call this supply entering the market, but it's still an upthrust. It looks like one. It acts like one. It is one. There is no effort to rise here. This is a classic example on the daily bars of a change in behavior in the market. But the market doesn't really change behavior until about here. And this is where I began to get interested around 6-1 in shorts on this chart. But this is, remember, a daily chart. Now, when I get really interested is when we take out these prior support lines. And we did that just as I projected on Friday. So now I'm going to trade in harmony with the trend, but I'm going to observe key VSA principles. So we put up here a Kagi chart again, and I can see that as we're coming down, we're making increasing volume on the down bars, and as we try to go up, we're failing. This is very significant, this area here to here. Now, so I'm not going to give too much away in this seminar, only because people have paid very good money to come and see our seminar on this. But let me show you something else. If we convert this to the monthly chart, what you'll now see is a very interesting shape going on. And I call this the mushroom. Now, again, I've written about it in my book, so there's no big secret here. We've got a clear phase of distribution. Okay? And the distribution phase actually happened in here. Based on the Kagi count, this is where the big distribution phase happened. And then the monthly support line got taken out a while ago, but the weekly is confirming it. So how do we actually trade this then? We are definitely, look at the red diamonds. We're in a downtrend on the monthly chart. No doubt about that. If we look at the weekly chart, downtrend. If we look at the daily chart, we've come out the trend channel, we're in a downtrend. Now you can connect and do a trend channel here if you want to, but let's put the bar chart up for a second. And what do I see? I see a change in behavior in the market, really from that bar there. And what do I observe on that daily bar? Oh, I do have the trade guidance signals now, Thomas. Okay, but I'll show you how we translate into a trade setup. I don't have any signals on the daily chart other than this one, which showed me that the market was being tested, and it was, but it failed. That's what got me interested in going short. There are several things on the daily chart, but do you all agree with me? Let me just do a trend line here. Let me just put a trend line on. And we'll go from the high here to this high, probably there. Actually, we can go from there. Do you all agree with me that this currently, for the last 2 or 3 weeks, is in a downtrend on the daily chart? Yes or no? You know, I'm going to cut, base, I'm going to come to that in a second. I'm going to build this for you. Just be patient with me. I'm going to build this up into a trade setup for you. Okay, John. Hello, John Zito. I haven't seen you for a while. Hi, John. Nice to see you. Of course it's in a downtrend, yeah. John, I might be stating the obvious, but that's for a reason, as you'll see. Now, what do we notice here? So far, we haven't got the final volume on this bar. I've got to download it again later. But it looks to me it's trying to go up on no demand. Now, we then want to use the scanner. Now, this is where the trade setup actually arrives. Now, last week, when I did my seminar, it was last Wednesday, in fact, I did the seminar, we had got a number of indications that this market was going to fall. Now, can you all see my scanner here of the British pound currency futures contract? Okay? Can you all see this here? This is the 4-hour chart here. Can you all see the scanner? All right. Now, one of the difficulties many traders have is knowing which way to trade and what time frame to use. Now, we're dealing in probability when we trade. That's it. There are no guarantees. There is no guarantee that every trade you take will make money. Far from it. So you're dealing in probability. But the idea is that you put the probability in your favor. So we do that by determining the trend in different time frames. However, does a trend always cause, if you're in a downtrend, the prices keep falling on every bar? No. We have green signals in downtrends, and they're not wrong. And the last one that came in was an absolute classic at the round number. Everything happens at round numbers. At 1.5700, professional money decided to support the market. Now, I can see that the bar colours here begin to change to blue, and I make 2 higher highs in a downtrend. I particularly don't want to stay short when that's happening, because it looks like they're going to mark it up to this 5.8 level, which is where I think it's going to go. So my short position has been closed. Today, something very interesting happened. I am looking for short trades, and right in front of me is a long trade. Now, my Kagi chart tells me that the market's trending down. It is. My 4-hour chart is in a downtrend. It is. My 3-hour chart is in a downtrend. It is. And I even get an upthrust coming in. But I'm still not sure, because behind me I've got someone putting the brakes on this move. Some group or groups or banks have stepped in and have put the brakes on. So this car or price action that's trundling down to 1.5000 has been stopped. The 1-hour chart, I look at that and I get a very unusual signal here. Okay, because you don't usually see an indicator on an up bar with high volume. So you have to go down a time frame. Now, on the 30-minute chart, what I see is a change in behavior happening just here. So I use a different time frame. I see a test and the market is rising. The diamonds are becoming green. So if I'm short seeing this climactic action here, we call that a selling climax. This is basically professional money stepping in on massive volume and saying, we don't want this price to collapse yet. We want to hold it up for some more selling, which they do quite successfully. So now my bigger time frames are all against me, but do I want to be short today? No, because I've got climactic action that's immediately tested. We see climactic action followed by no supply. And if you've read my book or Tom's book, you'll know that's one of our favourite setups to look for long trades. But did that give me the entry? No. Did that give me the entry? No. But if I go the 5-minute chart, you will see something that jumps out at you like a sore thumb. We have this afternoon, or this morning at 10:30, an indicator with all that stuff in the background that we saw, a massive bout of volume comes in. It's on a down bar, and the market's been trending down. So I'm thinking of going short again here, even though the diamonds haven't changed, but my rules, my trading plan, keeps me out of trouble. It tells me there, on these two bars, that professional money is supporting the market and I should be looking for a long trade. And you're exactly right, Ian. Very, very well observed. Yep. Hit the exact retracement. I did use Fibonacci today, and the Fibonacci level, if we take the low from 8 a.m. and the high, and you look at the fib level that I've put, that's exactly where I went long. And the reason was we were in an uptrend for the day. Professionals sell into up bars. So if we're in a downtrend, they're going to sell at higher prices. Lo and behold, look, even here, confirmation. More stopping volume. And the market trends up nicely. It goes from here, well, it goes up about 22 pips. Not the biggest trade in the world, but a very, very good setup. Now, I want to show you now, because we are limited for time, the S&P. But where do I think the pound is going? I think it's going down, but I think we're going to see another upthrust. And I think the key level for that upthrust, if it appears, is going to be just here. Okay, I'll show you. Right up here. It's almost going to go, it's either going to upthrust here, or it's going to be no demand at that level. But if I see no demand up at 1.58, I'd be a lot more interested in shorts. And then again, I'm just going to go down to my time frames like I've just shown you and identify where it is. Now, the point and figure chart and the Kagi chart gives me a real clue, because here we can see that when I get my data, which I haven't downloaded yet for today, what I notice is, as the market, I'm not going to say too much about this because I don't want to, I know some of you in here went on the course and you paid money for that, so I'm not going to give away everything that Tom said. But I will say this. When we see these narrow boxes, and then these wide boxes on high volume, and then again a wide spread down on the volume is the key. It gives us an idea as to where this will go. At the moment, my view is it's going to pop up to 1.58 and then continue its move down. And you can see here that when you look at the box sizes that I'm using 0.00337, okay, which is about 4%. So I'm using a 4% reversal box. But again, you can adapt that to your trading style. That's one of the things. What David Weiss did in the point and figure course was showed how you can change the box sizes to the style of trading you're in. By the way, just so you know, point and figure charting and Kagi charts, they're an art. You have to learn them. I'm finding this myself. You know, I'm having to do some paper trading on some of this stuff that I'm doing to test if it works. So I don't suggest for 1 minute that you should rush out if you've got no knowledge of this. If you want to learn how to do this, we have a course that will teach you it. And it's based on volume spread analysis, so everything's based around VSA. That's not going to change. But it's also showing you now where we can project direction. Now, yeah, you're right. You said, Gavin, in November you said the S&P was going to reach 1,500. How did you know? I don't like to use the word I knew. I like to use the word I could see it on a chart, and I want to show you it. Because I do know that, you know, when I do the projections on YouTube and stuff, and the markets make these moves, I do get a lot of emails. And I just want you to say that this is not a guess. There's no way you can guess that. Not back in November, because back in November we were down at 1,400, and the news was about a fiscal cliff coming. Do you all remember this fiscal cliff that never actually happened? That's exactly how professionals buy. Here, on this bar right here, okay, was where I knew that market's going to go higher, because I had a trade guide of signal, I had a Kagi box count that confirmed it. And even though the market did go a bit lower, not much, it went lower on very low volume. There's a bit of a clue for you, look. See here? And then here it began to pick up, and that's what we call a springboard. So we had a spring, a Wyckoff spring, but here, on that bar there, we had the highest volume since here, and certainly since over here. This is where the professional money bought the market. That's where they bought it. How do I know that? Look at the volume, right? It's absolutely enormous. I mean, some of the biggest volume that we've seen for 10 years. But here's the problem the retail market have with the market as a whole. They don't understand it. The news here is telling them to go long gold, buy gold, and sell their stocks. And most retail traders did exactly that. I talked to them. They're kicking themselves. They're saying, what? Gavin, I don't understand. But Wyckoff taught us 125 years ago that the professional money buy on bad news. Warren Buffett, an expert in this, said you can't buy something that's popular and do well. And you can't. Yeah, John, I am recording this, and hopefully it will go on YouTube if it uploads properly. We've had some uploading problems recently, but I'm hoping it will go on YouTube. So what do we see about this chart? Well, every time the market comes down to this price level, look at what the volume does. It gets lower and lower until finally there's nothing. That's why we're in a bull phase. And that bull market will not end for the moment. But what I expect to see is a shakeout. A shakeout is exactly what it says on the tin. They mark the price down on some news. Now, it could be anything. I can't, unfortunately, predict what the news is. I remember, it's funny, a guy rang me in the office a few years ago after I did my prediction on oil, when many of you have probably heard that oil was going to $200 a barrel, and I said it's going to go to 100. It actually went to 36 or 33, sorry. But a guy rang me up in America, and we have a British sense of humour, and so we can be a bit facetious with our sense of humour. So he rang me up, he says, Gavin, I'm going to be going to work for a fund. He said, you nailed the oil market there. Where will the S&P 500 be in 6 months? I need to know. I'm going to put all my eggs in this basket. So I said, well, just hold on a second, sir. I'm going to just consult the trade guide, a crystal ball, and I shall be able to tell you. And I went quiet, and you heard him go, oh! He went, sir, you have a crystal ball that reads the markets? I couldn't stop laughing. I said, sir, I'm just messing around with you. No, I said, all I can tell you is what the chart tells me, and I trade what I see. And what do I see over here back in 2011 is a swelling in volume on the downside, followed by more buying on these bars, followed by a massive move up. But the chart I want to share with you, which I think probably summarises and what I want you to understand tonight about how this works, is when we're attempting to look at markets, we're always looking at the news. We can't help it because we think that the news is our friend, that it's going to help us. So I'm going to show you a chart of British Petroleum, and I'm going to show you it in a Kagi chart, which I haven't shown this before, so it's the first time I've actually shown it. And we're going to put up a weekly. All right, and we're going to put up the Kagi, or Kagi. All right, now, what we know is that this particular stock has been massively accumulated by the smart money. How do we know that? Well, when we go to the monthly chart, you'll see it clearly. But we want you to look very closely at the box count here. We're looking more at the reversals as well, and watch very carefully as when the high volume comes in, followed by the retracements. There's a clue in there, and we've now headed up to 44. Now remember, in 2010, this company British Petroleum had the worst news possible. They were going out of business. Apparently, Libya were going to buy them. Well, sorry guys, I don't think Libya actually brought you. It didn't happen. See if I can convert that to a weekly chart. Okay, and so we'll go all the way to here. Let's see if I don't think I've got the data to go back that far, actually, so no. But what happened was the news here was extremely bad, as you know. And when we looked at the chart, this is what we saw. I can show you probably clearer on my, because I know I've got the data for this, on the US stock. Here is a very clear example of a selling climax. Now I've drawn my green line there because that's where I buy. I buy when it hits the line and add to the position. Now I remember this day very well. 11th, it was actually the 9th of June was actually when they announced we cannot cap the well. We can't do it. At this point, BP were apparently going to lose several $1 billion on this to clean up the spill. But in fact, their accounts show that in 2010 they made a good profit because they didn't have to pay a dividend. And they actually got tax breaks. So this is the way the game works, everyone. But we look at the volume on that day, and we look at how massive the volume is on that bar. Now, the reason I'm showing you this is because I did a seminar at MIT in Boston to the Boston Traders Group. Great group of guys and girls. And by the way, if you're in Boston, you've got a lovely place there. I really enjoyed the hospitality. But I took my wife Laura with me actually on this day. And I always remember one of the guys saying to me at the end of the seminar, he said, Gavin, that was great. Thanks very much. Could you recommend a stock then that we should be looking to buy? And I remember saying to him, yeah, BP, British Petroleum. And he immediately obviously started laughing and said, have you seen the news? It's exactly what he said. Have you seen the news? And I said, yes. And that's exactly the time when you should be looking to buy. Now, to finish the seminar, let's go and look at the S&P. And let's go and see what the Kagi chart and volume spread analysis has told us about this market. Okay. So the first thing we're going to do, we're going to have a look and we're going to put on where our first point of accumulation is down here. And we all agree, I'm sure, that that is where the accumulation phase started, here and here. Now remember, when professionals accumulate, the market goes sideways for several weeks, sometimes months. That's deliberately done. They don't immediately mark it up against themselves. That's bad for business. They accumulate on down moves, so they sell just enough to bring the price back down to buy some more. That's how it works. Now, the trigger to buy this index, or at least to be interested in going long, was when we see this bar here. Now, I'm going to draw a line on the top of that bar in turquoise. Now, we note that the market, or the price action, begins its rally here. But here, on that bar, the volume is just too high. There's still people panic selling. So the price falls back down into this range, into this trading range. Now, that's a very good sign for me when it does that, because then, looking at the Kagi count and the point and figure count, I take my count from that moment, and I notice that the volume is very low on this bar here. Now, on this bar here, everyone was emailing me, Gavin, well, of course it's low. It's Thanksgiving Day. I said, listen, professional money don't go to sleep on the job. Trust me. There may be low volume, but the rest of the world was trading. Only America wasn't. And the markets are trading in Asia, and they're trading in Europe. So don't think just because America is celebrating Thanksgiving that there won't be some trading going on, or at least the next day we'll get an idea what's truly happening. And sure enough, we did. There is an increase in volume on an up bar, followed by another increase in volume, followed by another increase in volume, and then it's tested again just prior to Christmas. But really, the key thing, okay, and I've got to go in a second because Philip Friston's coming in here, is that bar right there. Okay, and if I put the bar chart up, you're going to see all along this up move, we have got signals to buy in a rising market. And if you put a trend channel on here, which I'll do, you'll clearly see if we take our first two lows and project out, this channel is very much being respected. And we've got a target up here. Now we're making new highs. The next one, according to my, Wall Street money never sleeps, says Pedro. That's very good. My next projection is 1558 on the S&P, but expect a shakeout first, so be cautious. I think there will be a shakeout. Okay, to finalise, to finish up, a couple of you have asked about the point and figure chart. Okay, yes, it's here, I think. Right there. That is the course that we did, okay, and we've kept the pricing the same that we did last Wednesday, okay, because those of you who said that you don't get paid until tomorrow or whatever, we've done that for you. So the course here covers, it's David Weiss, who's a Wyckoff expert, Tom and myself. It covers point and figure charts, VSA trade setups, and it also covers trigger numbers, okay? And again today, for you that have attended the seminar, we've done a special price on the first 10 orders like we did last week. That's working extremely well. And by the way, for those of you that did order, thank you very much indeed. I appreciate your support. That was great. Also, a couple of you have said about could you get the charting platform? Yeah. We have a website called Trade to Win, okay? Trade to Win. And I think if I refresh that, there is a, because it's Tuesday today, if you are thinking about trying us and you want to become a member of our team and learn the VSA method, then we're doing a special on our Trade to Win site right now until midnight, and that's Chicago time. And you have to just type in, when you order, type in the word Tuesday, because that's the day today, at least I think it is. In Australia, it's probably Wednesday, but type in a coupon code called Tuesday, and you can save half price on the plugins. And that's for any plugin, by the way. It's for Metastock, TradeStation, NinjaTrader, Infinity Charts, MetaTrader 4, which is a forex. We have all the VSA signals built into those platforms. Okay. How did you get the volume indicator for the Kagi charts, as Peter? On eSignal, it seems not to function. Well, I'm using the Trade Guider platform there, but I know in NinjaTrader that definitely works. We will be putting Kagi charts or Kagi charts into the V5 of Trade Guider. We're still working on that, and now, thanks to Microsoft, they've just released Windows 8, which is extremely kind of them because we've got to do a load of stuff to make it work with Windows 8. But this is what happens when you deal with technology. You're always playing catch-up. And Andy, it's the same answer. It's in there. It's actually already in Trade Guider, but we haven't got it activated because we're still building the version. So until I have a build that I can send out for testing, I'm afraid be patient with us, but we are working on stuff, definitely. So I hope you've enjoyed this evening. I wanted to just give you a flavour of how important a Kagi chart is when you look at it. And it's clearly, we're in a bull market, we're in a very weak market in some of the currencies, and there's a lot of opportunities to make money. And I'll tell you what, but judging on the last 2 weeks, everyone's coming back to trading because they can see there's massive opportunity here. I wish you good trading, constant profits and blessings. Take care, everyone. Have a great rest of your day. And remember, if you want to find out more about what we do, the best place probably to learn is from our websites. Or if you're really serious about point and figure charting, then that is the course. It's online. It's all available immediately for immediate access. And it's at 6 on-demand sessions, by the way, with David Weiss, Tom Williams, and myself. Take care, everyone. Have a great day. Bye-bye. Yeah, hi, John. I just saw that what you just typed in there. Absolutely. Just contact AJ in support, and he will contact me. And somebody said, I want to buy 2 of the courses. Can I get a discount on the second one? Absolutely. Just email me, Gavin H, at tradeguider.com, and I will be happy to do that for you. can you have a discount on the RT software? We don't discount usually. We do promotions on RT, but they've all ended. But if you're interested in the real-time program, again, email me and I will take care of you personally. Okay, thanks everyone. Bye. Yeah, hi everyone. I'm just going to log out now because Philip Preston's coming in right now for the VSA Club event. Okay, bye.
The organizer has entered